All right, so let's do another process of elimination with the intraday profiles from ICT, and we'll incorporate that with some TGIF. So first off, looking at how this week was shaping out, 15-minute time frame, we had Monday was a holiday, the 25th, Tuesday until Friday, and we're taking the high and low of the week prior to Friday's 8:30 news release. So everything up to 8:30, we want to see where the high and the low are. There's my cheat sheet for today. I want to first look at how the week was seeming to shape out, and then how these intraday profiles can actually help to confirm or invalidate a certain bias that may be held for the week. So we had a low of the week here for Tuesday, ignoring Monday's price action as a holiday, and we had a high of the week here. So we set out the TGIF projections, which is taking the fib from the low to the high and using the 20% and negative 20%. So the TGIF projections, which is in ICT's video, I put it somewhere in the top. He talks about it as a retracement, pulling back into the week's range. But like all of his concepts, there is a principle of both expansion and retracement. So taking it from the low to the high, we've got the negative 20% and the 20%, and we'll stick those out as expansion and retracements. And then we'll do the same thing if price were to go in the opposite direction, and we lay that out just like that for the retracement and expansion on the downside as well. So over to the right, you'll see those levels are set out. Now, before getting into the London session, which will frame the New York AM, we'll look at Asia and we'll look at everything that happened previously. So we saw that a new dealing range was created here, and that new dealing range gave us a large buy side imbalance, sell side inefficiency. That suggested that once it got filled, this is 50% of that new dealing range from the low to the high, that we could be looking to take liquidity at these smooth relative equal highs and these smooth relative equal highs. We've been having quite a rally on this indices since October, so it would stand to reason that there will be some interest in getting back above that high. The new week gap is all the way down here, so as a bookmark, not a PDRA, but as a bookmark, we can see that this has been quite the bullish week. Now Friday's price action is already very different. Most traders know that on Friday the price action doesn't always follow through with the direction of the week. Like ICT says, you can have a retracement back into the weekly range. So we're going to set out both those expansion and retracement points, both the upside and the downside, and then we'll look at all this price action and get into the meat of it on a 5-minute chart. So here's what price did. These were the two profiles that were being used. Let's go down to 5-minute. And we're going to track these two profiles, and you can just see already just the beauty of these extensions and retracements. This retracement seemed to be promising. We inverted. So as when we saw that this profile was confirmed, which we'll break down in detail in a second, we returned to that retracement, which also had a fair value gap and a breaker. We ran all the way down, not only to the new week opening gap, but also to the expansion on the downside. Again, we set the retracement and expansion levels to the upside and the downside. And then you can see that even though we had this run down in lunch, that we saw a retracement back into this SIBI, which on a 15 or 1 hour chart is like a full bearish run. And we close right around that TGIF retracement level to the downside. So let's dig into how we could even figure this out, because those relative equal highs, they look very tempting. We filled in this 15-minute fair value gap. We came back to a breaker. It all seemed very algorithmic. Everything here was fading upwards, seeming as if it wanted to take a punch towards these relative equal highs. We even saw in London that there was a push up. So let's dive into what made the AM session of the indices so clearly a bearish run using these intraday profiles. So the profile in play here is a London protraction, bearish. So we have our Asian consolidation, which will be from 8 to midnight, and we're going to take the bodies to see the full scale of the story. Once we have our consolidation, now we're starting to look at what is it about this price action that started to give us some sentiment that this is actually going to be bearish. Here's our relative equal highs up here, that's buy side. We took this internal buy side, all this liquidity was taken here. Now you can start to see the clues when you put your framing for the London range, which ICT uses from 3 to 5. So I'm drawing this out slowly just so we can journal this price action well. So here's our 3 AM high, range high, put that in blue, and 5 o'clock range low, and we'll put that in blue. So London has taken Asia's buy side and has now come back into that range. It's almost taking Asia's sell side, but leaves relative equal lows on sell side. So instantly we have identified this model because throughout the London activity we see that price is shifting bearish. So we're seeing it shift bearish, and right here coming just before 8:30 we confirm that we're now below Asia. So we have two things that we could be considering. One, is this going to be a seek and destroy model if we were to see price push back up? And that's really not a model that works well on profiles. Like, quite honestly, it is a profile that ICT has not. He doesn't talk about it as something that you want to trade. Seek and destroy is tradable, but he does encourage most of us at this level to say just stay away from it. If you're seeing both sides of a range continuously being taken, Asia's high and low taken, London's high and low taken, just sit out. Okay, so here's what we got so far. We know that we're in a London protraction profile. It's not a delayed protraction, it is the protraction. Little tips, the details here, I'm talking about the details in the profile. Take a look at how in London we do not take the high formed between 3 and 4. So right in here in this London Silver Bullet, we have this run up, but we immediately start to break down, and we do not have anything that challenges a high again. Those relative equal highs are going to stay intact, and they're going to leave people wanting, because the T's here, even ICT concepts, can be used against us if we don't have the right context, right? So that buy side liquidity that was left up here is very smooth highs coming back down, looking like this activity was a retrace, digging below sell side, filling that 15-minute fair value gap, breaking back above the 50% of that dealing range. But all it was doing was inducing us to be, or the smart money at this point was using this as premium. So we've got our profile in the London confirmed. Asia's consolidation. Sometimes we'll have a dip below Asia, but not always necessary. We'll have that run up right around that 2 o'clock to 4 o'clock. We'll create a lower high, which would be here. And we should see some aggressive movement before the New York Open. So when I say these profiles have details just layered in there, like just that alone is easily overlooked if you don't take all the components of time in this profile. So we're expecting this bearish run before the New York Open, and the New York Open is 9:30, which is right there. So let's mark out our 9:30 opening price. and I'll even just put hash. So that opening price is what we're looking at for New York. But we're using all of this to now frame why do we want to be bearish. The next thing we'll see is, okay, so that London sell side, Asia sell side, the range we're working off of is now taken. This range, 5 o'clock ended here, was swept. This is a retrace, not a consideration to be a buyer. And that's fine. Maybe somebody at that time was. But as soon as this price action fails, we get our breaker. And in fact, we get that breaker knowing that we've got the TGIF levels in mind, and knowing that throughout this price action, we're now retesting that same fair value gap back on the 15-minute time frame. So let's switch over now. We're expecting to see this price action. So all of this up until noon is the AM session, including the opening range. So we switch gears into another profile, and now we're going to look at this profile. So for the AM session, we're using this information here, which is keyed off of London, which is keyed off of Asia, which is keyed off of our TGIF. So before we get into this section, let's just recap the details of the profile. London range has been defined. We're below the London range. Now we're going to look at 8:30. News embargo lifts at 8:30, and we're gonna outline our midnight to 8:30 range. That's our range low. And this London range is still intact. Range high. Okay, let's clear some of that out. In most cases, we're looking at this and saying, okay, Asia's liquidity is taken, London's was left. We have now broken lower on London. We've taken Asia's liquidity. If we were to see a sweep and return back into the range during the silver bullet, we see a bullish move, we would expect to challenge the high of the range. But we're not thinking that, because we have our London profile, which tells us that this protraction in London reaches up into some PDRA or takes some liquidity. It fails to create a higher high, and it will create a displacement through London's range. This is the London Open, and Asia's range. Because of that, we're looking for a continuation model. So I've dubbed a continuation as a model B, a standard reversal back into the range as a model A. So this would be your classic model B continuation bearish. So that's where you see price action between 8:30 and midnight. We'll create a range, and instead of seeing something where price will displace back into the range to attack the buy side, it creates a continuation where that high is left wanting for a continuation, and instead we see a break lower. So let's dig into this. TGIF retrace, we see that level hit perfectly at 10:05. So right in the silver bullet window, we see that price leg go up. There's a displacement on the 5 minutes. You can even see where that breaker is. Price comes back to the body of that breaker and then aggressively attacks that sell side. But let's look at this profile and find some details in here that are just so beautiful, starting with the opening price. So opening price is this small black rectangle here, and what's the first activity that it does? It pushes higher. So opening price pushes higher. In a bearish London Asia setup, the opening price pushes higher, enticing people to think of this profile as something that's going to continue bullish. But we know that we've inverted on the TGIF retrace. We came to it, we broke it. We're going to return to it simply to continue the London move, because this is a London protraction which will continue bearish through the AM session of New York up until noon. We are back into a fair value gap, back into a breaker, back into the TGIF 20% retrace. We're not expanding higher. It means we're going to expand lower. So New York open starts off, 930's opening price pushes up. We see that in this profile. We are expecting to see a a bearish run aggressively for the AM session until noon. So let's lay out all of our profile items here for the New York setup. So here we've got all of our time mechanics. AM session 9:30 to 12, PM session 1:30 to 4. We've got our silver bullet timings, and we're going to dig into the first silver bullet window on the 1 minute. So here we go. Price runs up. We are anticipating this breaker, this TGIF retrace to hold price. We get that movement here. That's a perfect touch right in, and the immediate rejection down. Looking at this price action, we see where our breaker is. So the cleanest view is probably like, I want to say it's the 2 or the 3 minute gave like one of the cleaner views on this breaker here. So highs taken, displacement, breaker. We also see the fair value gap, the standard fair value gap that we would expect. That gets tagged in as well. So we're using this profile again, looking at the details, and we're expecting this run to be fairly aggressive down into some area in the sell side. So let's go back up to the 5 minute. Take a peek at what this profile is expected to do. So relying on time of day, we're looking to see where will we get this leg down. ICT has said lunch can be as early as 11 depending on the day. So we're looking at that here, 11 o'clock to 12. You can see if basically like this is just exactly what you would expect. It digs down right into the expansion level, the TGIF expansion level here. Bodies stay within price. We see that push out, shift in market structure, barely tags into this fair value gap here. More what I'll be looking for is the bullish breaker, which would be this level here. Immediately as price closes above this high, shifts this market structure, we push back down with a bearish candle. So it's this candle that will be the one that will be retesting that breaker, and we start to push back out. So price comes back into the retrace level, which we're anticipating because of this fair value gap and this order block. We see that price sweeps it, comes back to it, fizzles right around it just perfectly. Like it just looks so perfect, but you don't know this if you don't study the ICT concept. So that's the TGIF level on the breakout, and just like we would expect, we're looking to see time of day if we're retesting something in this leg. So again, the details of this profile is that this bearish leg now provides context for whether or not this last hour price action is going to be bullish or bearish. Admittedly, ICT says sometimes you don't know. You have to kind of work off the price action of the day, the context of the day. It's the last day of the trading week, the last day of the trading year, last day of the trading month for 2023. So anticipating whether it's bullish or bearish is secondary. At this point, you've seen the expansion down to the bearish expansion. You could be looking at this reversal, which is expected, fully anticipated. And why would this be anticipated? Well, quite plainly, if you take your AM leg, which is in this gray box, and you see a push below its sell side, there are only two profiles that have a simple lunge, meaning only 2 or 3 swing points, not a complex lunge, and then a push below sell side. So when that push below sell side happens here, and you're seeing this price action here, now you're anticipating that this will be this New York PM session reversal. Now it's not going to consolidate, it's not going to come back to the 930 open. So it's either going to be breaking above the 930 open or staying below the 930 open. That's that small little black rectangle thing right there. So what we have is price making this run. Whether you look at it as this 11 to 12 lunge, however you want to think about it, I'll just leave that up to people's interpretation. But for my journal entry, I understand the lunge macro will move based on the activity prior to or after lunge. Regardless, we see that somewhere between 12 and 130, price has made some form of a bullish push, coming back up to the retrace level to the downside. So when I push ahead and I'm looking at the silver bullet timing at 230, my context is to the left. So this bearish push up here on a 5-minute, I'm framing that fair value gap. And here is our silver bullet window. And we're tracking from 2 o'clock, price just continuously testing this area. We don't get our first displacement or market structure shift beyond these buy side areas here, 1, 2, until here. Once we get that close above that buy side, now we're looking at the anatomy of this leg. And this leg, we have a couple of areas that we're looking at. We have our value gap here, and that's pretty much it. I mean, if you are the type of person who takes your wicks without the doji, then your fair value gap is there. Body stay within, get your push up, you'll clear this buy side 1, you'll get one more retest here into this fair value gap. So once this buy side is broken there, then you're looking at the, changes to a different color, and you're looking at the anatomy of this leg, and you're saying, what in this leg is my discount versus premium? I'm waiting for price to return to discount, which comes right inside this fair value gap. Gives one more push to the buy side, and time of day is going to be super relevant because that profile is looking at this first 30 minutes after lunch, so 1 to 1:30 or 1:30 to 2 depending on how you break it down, but at first 30 minutes. Then if you visually just split this time in half, then this is right around 3:15 to 3:30, and then your top profit taking window goes all the way until 4, and then the blank space over here goes all the way until 4:45. I could be reading, I mean, I know that there is legitimacy to this. It can seem like it's really stretching on what seems to be just a rudimentary diagram, but there's a lot of valuable study information, even just in the way he drew price's direction after the opening bell. It's different. When you look at each profile, it's meaningful, and that's what we're seeing here. So we get that fair value gap tag, one more push bullish, and then we're seeing, we don't know, up or down. What we saw today was price simply meandered back to that TGIF retrace on the bearish level. So that's the deep dive on the profile, process of elimination or identification using things like the London protraction model, seeing that there was no secondary push, waiting until that price broke both the London and Asia sell side, using our TGIF framing for context, expecting, anticipating, fully realizing that price was going to push up because that TGIF level now became an inversion. That would have normally been a bearish retrace to a bullish move, because that's the bullish expansion. But once price broke below it, then we're expecting it to invert, so it becomes a retrace for a bearish continuation, and we saw that work out like textbook today. So I hope everybody had a great 2023. This journal has been going for the entire year. Had a lot of fun doing it. Definitely saw my skills improve by just articulating and talking through it. Wishing everybody a happy new year for 2024, and yeah, let's do it again.